Good morning, everybody. We are going to continue with Chapter 17. I hope you're all doing well and that you had a good start to your second week of e-learning. So we're going to continue on with the 17 application. Just to review, we classified materials as direct and indirect and factory overhead, if factory overhead is indirect. And we're going to be taking a look and referring to this today. So referring to our learning, what we did here. And then we looked at a materials ledger card, like keeping track of inventory coming in, being issued to production, and then keeping a running balance of a particular type of material needed to make something. Now we're going to take a look at the total cost of an item that is actually being sold. So, from start, we have raw materials, then we've got labor involved and indirect labor involved, and then we'll have the total cost of what it takes to create an order of production. Right, so this is the cost sheet for gears, and it looks like our customer ordered 10,000 gears, okay, and the date for production was requested on June 10th, and the date that it's desired is June 30th. So what we're going to do is we're going to finish up the costs of this product or these products being created. So these job recs were done in the past, and this is given to you right here. And we're going to wrap this up on requisition number 230. So if you go to your book is on page 526. What you see below was actually, and I just took it off, was actually something that goes to the next tab. So I took it off. It doesn't relate to anything we're doing here. So I'd like you to go to page 526 and take a look at the problem. So if you want to pause this for a minute, go right ahead and do that now. Okay, we're back. So page 526, it looks like we're going to record the following items on the cost sheet for job number 335, which is that 335 for the gears. All right. So materials requisition for number 230 or $1,900 of direct materials for this job. So we're gonna record that. So the job rec is 230. You could type that in, and now the amount is $1,900. Okay, we're not going to total it up quite yet. We're going to give it a second before we do that. All right, so the next one is June 29th, a total of all job time records for the job number 335 for the day. So that means the labor. Like what do we have to pay the folks who actually create this product? And we're going to keep track of that on a daily basis. So on the 29th, it looks like the direct labor cost this company $2,725. Right? And now the instruction number 2 says we're going to journalize the following transactions. So 2 things. We're going to journalize the actual physical materials that go into the product, and we're going to journalize the payroll of the labor that went into the product. So 2 separate things, but they are both expensed, and you're going to see how that's done and how that's reflected in journals. All right, so the first one has to do with materials, and we're going to journalize that in the general journal, and then when we get to payroll, we're going to go over to cash payments in the next tabs. Let's go back to our 17-1-2 tab, so our first one right here, and let's take a look at how we're going to do this. So on June 30, $24,000 of direct materials was requisitioned, and $20,000 of indirect materials was requisitioned for production. Okay, so we call them direct and indirect, but they're not journalized that way. They are journalized differently. So our account titles are called work in progress and factory overhead. Right, so the work in progress are the direct materials. All right, so let's date this journal, June 30th. And we're going to call our first account title, Work in Progress. And these are our direct materials. And they told us that it was $24,000 in total. I'll let you type that in. All right, the next one is the indirect materials, $20,000. We're going to call that factory overhead. And we're going to debit that $20,000. Okay, these are costs, they're expenses that directly relate to the cost of creating these gears. All right, so now what's our credit going to be? Our credit would be, right, a reduction in the materials. And so we're going to call it materials. They used to be an asset, something we bought in order to use, but now, so that would be a debit. When we bought them, we created a debit. But now that we're using them, they're going to be a credit. So we're going to add up. You can do this a couple ways, use your sum or add them up separately. Either way, you get $44,000 worth of materials that have been requisitioned or used in production. Okay. Now, the next one is payroll. So we're going to click on the next tab, and we're going to be in cash payments. All right, so let's take a look. June 30th, paid employees, their semi-monthly pay. All right, so this goes directly to the creation of these gears that these people put together. So this is all their pay. So direct labor costs were $52,500. All right, so that's a total, that's gross pay without taxes. And that was paid out on June 30th. The account title is work in progress. We've seen that before. It was over here, work in progress. But one are materials and one is classified as labor. Okay, this is actually someone's paycheck, but we're still calling it work in progress, which is kind of interesting. All right, so it's being expensed that way. The next one is the indirect labor costs. So these are folks that work at the company but don't actually put their hands on the product and the creation of the actual product. But it's your, it could be your the people who load things in and off. The production line, not the production line, but in inventory, maybe people who are clerical. There's all sorts of jobs in factories that have nothing to do with the actual product, but they support the process. Okay, and it's called indirect. So we're going to call that factory overhead. All right, so let's put some numbers where our words are. So the biggest expense to making this product is work in progress labor, $52,500. Factory overhead, they told us, was $9,500. Still not cheap, right? All right. So now we have taxes. And if you remember in accounting one, we did payroll. Do you remember that simulation that we did? So we did payroll, and we know that when we pay our employees, we have to withhold taxes to pay out to the federal and state governments, and or Medicare, and member, all that, all those withholdings. So we have three payables that we're going to be dealing with. One is given to us. The other two we have to actually calculate. So the employee income tax payable, they looked that up on the table, and the total amount was $6,820. So we're going to type that in. Employee income tax payable. And that is going to be a credit because it's a payable and it's going up on the credit side. We haven't forgotten our basic accounting, right? 6820 is what they told us. Then we've got Social Security tax payable. Okay. Now, Social Security tax payable, as you know, is 6.2%, right, of all gross wages. So gross wages would be not only work in progress, but also factory overhead. So we're going to create a little formula here. I'm going to go slowly. So we're going to put an equal sign. We're going to put a parentheses here as well. And we're going to take the 52,000, we're going to add it to the 9,500, close out the parentheses, and multiply it by 1.2%. Enter. And that gives us $3,844. The next one, or the last one, is Medicare. We're going to do the same process. Equals, we'll do this again, 52 plus 9,500, close it out, but we're going to multiply it by the Medicare percent, which is, yes, you're right, 1.45%. Not 46. Nope, not 46. 45. There we go. Okay, now we got to cut a check to pay these people. So here's the thing: these folks are not going to get that amount. They're going to get this amount less that amount. All right, in aggregate. So the check that we're going to cut to payroll to pay these people is going to be here. We are withholding these payables to pay out to the government. So this goes to federal, state, federal tax, and this is Social Security and Medicare. All right, so how are we going to figure that out? Just a little formula, very easy. So we could do a multitude of things. I'm just going to do it my way. 52,000 plus the 9,500, and then we're going to subtract out the payables individually. Or you can use parentheses or your fancy way to do it. It's up to you. All right, so we're going to cut a check to payroll for $50,000 or $50,437. And that is the end of 17-1.2.